Hey, how's it going? My name's Blakewoods. I'm a realtor here in Cartersville, Georgia, and I got 5 tips for first-time home buyers. If you've toyed with the idea of looking for your first home, why don't you pull up a chair, grab a snack maybe, and hopefully this will get you ahead of the game. All right, we're going to kick off this list. Keep in mind, these are not in a scale of importance. They're all equally important. Starting off with number 1, which is credit. Now, credit is a part of what I consider the big 3. And now the big 3 are the 3 main elements that you're gonna come in contact with when you decide to go to a lender or a bank to decide to get a pre-approval when you start to look for a home. Don't worry, we'll cover the other 2 later in the video. But when it comes to credit, it's generally a good idea to keep it within good standing. That means paying off your credit cards on time, not having any collections hit your credit. This goes double for when you're thinking about buying a new home. Your credit is basically just a score that shows you how responsible you are as far as your finances goes. And this lets companies know whether you're considered what's called a good risk or a bad risk. For example, if a random person walked up to you off the street and asked you to borrow money, but told you that they'd pay you back probably in another week or so, what would you say to them? You would probably say no, right? Well, what if that person had a transaction sheet showing that they paid all their debts on time, and that they'd be willing to pay you just for you to lend them the cash that you have on hand? You would probably be more open to the idea. But instead of a transaction sheet, we have a credit score, which is basically the same idea. So lenders and banks look at your credit score and see, is this a good investment for us or not so much? Which greatly affects the budget of your home. The more they trust you, the more they're willing to lend you, which is why you should always take credit very seriously and make sure not to overextend yourself or open too many lines of credit. Which brings me to number 2, your debt to income ratio, or DTI. This is a part of that big 3 I mentioned earlier. Now, your debt to income ratio is fairly simple. It's the amount of debt that you have per month divided by your gross monthly income. Now, when it comes to your gross monthly income, it's not going to change all that much. Of course, you have your promotions, you have your raises, you have, a career change, which are all great and you love when they come along, but they don't come along as often as we all would like them to. So I would like to turn your attention towards the debt side of this equation. This is where I see a lot of people unknowingly make some mistakes for themselves. Now, this debt isn't including gas or groceries or anything like that. This refers to items that you are either financing or if it's a debt that you currently owe. This is a kind of a situation where just because you can afford to finance something doesn't necessarily make it the best choice. Now, I don't know how much money you make. Obviously, everybody's different, but I feel like a general good rule of thumb is just to only finance the necessities. But I mean, we all want that 2024 Ford F-250 Super Duty with 35s on it to drive it straight off the lot like you just got it, like you're the man. One day. Moving on. But instead of buying the fanciest vehicle, just go get a nice, reliable car that doesn't cost an arm and a leg every month. I know it can be hard to stop yourself from buying, that brand new boat or that brand new Razor, but if you'll just save the fun purchases until after you make the main purchase, which the focus of this video is your home, I think you'll find it in your best interest. And also, there's always a time and place for everything. The lower your DTI is, the better. Go ahead, check yours. See if there's anything that you can work on or possibly fix, just before you start to look for your new home and to free up some cash. I mean, cash is king, and it's also number 3. This is the final of the big 3, and it does play a significant part in your ability to be able to buy a home. Now, there's a few things that you need money for. Obviously, one is your down payment, which there's all kinds of different loans that have all kinds of different down payments. Even some as little as 0%. Give me a call. But some of the main ones are 20% down conventional, 3.5 FHA, and of course a 0% VA loan, which is only for veterans. But remember, there are some for non-veterans. Like I said, give me a call. The other parts that require cash are going to come along after you find the perfect home for you and get it under contract. As soon as you get your offer accepted, you're going to have to put down what's called earnest money. Of course, this earnest money is basically just showing the sellers that the buyer has intent to purchase the property, and it's not like they can just go out on a limb, and it shows intent to buy. Now, the earnest money will be applied to your closing costs at the end when you go to closing, so it's not like it's just thrown away or given away to somebody else. Then during your due diligence period, you're going to have to pay an inspector to come out to make sure the house is, not held together by glue. If everything goes smoothly, then you'll have to pay an appraiser to come out and appraise your home. There's a lot of things that go into this for the appraiser to get their number, but what it basically just means is they are either going to approve the price that you guys agreed on or not approve it. So as you can see, it can cost some cash to get into your home. So that's why it's always a great rule just to save up as much as you possibly can. We're down to our last 2 topics for this video, so I hope you guys enjoy it and I hope you stick around to the end. Number 4, try to have 2 years of work history. There's not a whole lot of specifics on this one. It's pretty straightforward. This means taxed income of 2 years. Kind of sucks, but for ordinary people like you and me, unfortunately, our money doesn't really count unless Uncle Sam gets his cut. And also, I want to mention this because I see it so frequently, so I feel like it should be talked about. If you're self-employed, which means you receive a 1099 instead of a W-2, don't get right off happy. I mean, believe me, I'm 1099 myself. I know how easy it is to just want to write just about everything. Only specific work-related costs because it's the right thing to do. But it's true, and you can get swept away in it. You just don't want to write so much off that it practically shows that you make no money a year. Of course, all this can be kind of overwhelming, especially for somebody who doesn't deal with these complications on a day-to-day basis. Which will bring us to the final tip of the video. Go talk with a trusted realtor or a trusted lender that you know in your area and get down to specifics with them and talk with them about some of the things that you can do to put you in the best position for yourself. We're all at different points in our lives. What one person needs help with, the other person may not. Everybody is different, and these tips are all situational. Never feel like just because you may be lacking in one area that you'll never be able to own a house of your own. Believe me, I know at times our lives can be very, very stressful, but just like charcoal, that's what also makes the prettiest diamonds. I hope these tips were able to help you out and give you some food for thought. If you have any questions or want to know anything more about a specific topic I didn't cover in this video here, feel free to drop a comment in the comment section. I'd be happy to talk it over with you there. And if you are looking for a realtor to help you with your journey of buying or selling anything as far as real estate goes, and you'd like to get in contact with me, feel free to contact me via email. I'd love to have a one-on-one conversation with you. Until next time, I hope you continue growing 1% every day, and God bless.